going to be a seismic step forward to say that even though the volatility of an asset like Bitcoin is obviously much greater than that of U.S. Treasuries, so too has been the rate of return on Bitcoin over the course of the last 10 years compared to those Treasuries. For the higher risk, higher return stratum of where you measure what your hurdle rate is for your rate of return on a project, I believe Bitcoin will emerge as that new standard. And if you believe that, as I do, I think that makes for probably the most compelling case for any institution, governmental to non-governmental to for-profit to non-profit, holding some level of a reserve of Bitcoin. It helps to be bullish on it for the long run because you believe that asset's going to appreciate. But what it does is it tethers your institution's behavior under conditions of capital scarcity to something of fixed supply that has a fixed store of value that's likely to go up over the course of time. That is a different case for actually holding Bitcoin, even if you're a corporation. So we're talking about this at the level of the national stockpile or the national strategic reserve. But sometimes the case becomes clearer if you even look at it in the case of a company. If your company's sitting on a stockpile of cash, you're going to hold a lot of it. A lot of them do today in the form of U.S. Treasuries. Very few of them are holding those reserves in the form of Bitcoin today. I believe that is likely to change.
Welcome back to the channel. Aaron here from the Bitcoin Bros. And in today's video, we're going to be going over some MSTR updates, Bitcoin updates, and some news in the traditional finance market. So stay tuned for all this in today's video. Also have a clip at the end that I want you guys to check out. But you can see here, strategy saying STRK serves the market 2.6x larger than MSTR. Activating the ATM provides strategy daily access to this market. So STRK, that 21 billion ATM that they have announced, they're going to be tapping that to acquire more Bitcoin. That's really good for the short term for MSTR and the long term. So they'll be able to get more BTC on the balance sheet. And this is from Jeff Wall, and he's saying STRK is a great product. Thinking about this through the lens of a risk manager, 8% share dividend paid annually, preferred equity with $100 liquidation value, preferential to common equity, directly long perpetual call option on MSTR, no time horizon. Should the price of MSTR fall, STRK may be buoyed by market risk, return rates, $8 share dividend, read downside protection. Should MSTR rise, you have equity appreciation, 10 STRK to 1 MSTR. Risk is MSTR becomes too overleveraged for an extended period of time. In this event, MSTR cannot roll the debt. Given current leverage ratios, Bitcoin price stability, global political integration, it is difficult to fathom a circumstance where STRK is rendered worthless. Something with Bitcoin would have to break. Great downside hedge, income protection, yield on BTC vol with upside potential. It will take a lot of time for the market to digest all of these new shiny vehicles. So Jeff's saying this is a great new financial instrument that a lot of people don't even understand what it is yet, but more people in the future, institutions are going to be investing in STRK because of all these reasons here. And then Saylor says big things are coming. Let's see what he's talking about here. We don't really know what he's talking about, but he's saying big things are coming. Is the strategic Bitcoin reserve coming for the United States? Maybe that's what he's hitting at there. Who knows? And then to get into some traditional finance news, looking at CPI just came out this morning. February CPI inflation falls to 2.8%, below expectations of 2.9%. You have core CPI inflation falling to 3.1%, below expectations of 3.2%. This marks the first decline in both headline and core CPI since July 2024. Inflation is cooling down. And this makes a lot of sense. The stock market has been coming down, Bitcoin has been coming down, and now inflation is coming down right along with it. And this is something we've been kind of predicting. We've been looking at the USI inflation index on Trueflation, which kind of leads the CPI inflation number. And it has been falling off a cliff. The last time we had a CPI inflation number, Trueflation for January was 2.7%. We're down from 2.7% in January all the way down to 1.32%. So inflation, according to Trueflation, has been falling off of a cliff. And then you can see here, inflation is expected to decline slightly, continuing the trend we predicted in January, but risks are mounting. Tariffs are a big wild card. So they're saying that tariffs could add 0.5 to 1% to inflation, making essentials like food, fuel, and housing more expensive. Consumers are tapping out personal spending for the first time since 2021, while savings ticked up. Retail sales and consumer confidence both took a hit. Housing pressure persists. High mortgage rates are slowing home sales, but prices keep rising. 4.8% year over year. Rent inflation remains stagnant, but utilities are surging. Is the Fed stuck in limbo? Markets expected to cut 3 rate cuts in 2025, but March 19th meeting is crucial. The Fed may wait for more signs of cooling inflation before acting. And they're saying it's a short-term dip, but long-term uncertainty for inflation. The risks remain tilted to the upside with potential stagflationary shocks if growth weakens and prices stay high. So some things to think about when we're looking at this entire inflation picture. And we know if inflation comes down fast, that means the Federal Reserve is going to cut interest rates, which basically is going to push more money into the economy. But we'll see what happens. I mean, there's a lot of uncertainty, as we can see here, when it comes to inflation in the macroeconomic environment. But getting back to strategy, you can see we're at 263 right now, up 1% on the day. We got Bitcoin up here. It's at around 83,294. So Bitcoin and MSTR rebounding a little bit here from the lows. That CPI inflation report sent Bitcoin and MSTR up a little bit there. And if you guys need anywhere to buy MSTR or any other stock, you can do that on MooMoo. You sign up with the affiliate link in the comment section below. You get 30 free stocks valued potentially up to $2,000 each. So make sure to check that out. It's basically free money. And again, some Bitcoin news here. We have Metaplanet. They acquired 162 Bitcoin for around 13 million. They now hold 3,050 Bitcoin. So Metaplanet is continuing to buy up all this Bitcoin, and they have a Bitcoin yield year to date of 53.2%. So good to see there from Metaplanet. And then Blockhinge. They're not a huge buyer, but they acquired 2 Bitcoin for the treasury at 160K at 80,000 per Bitcoin. As of February 28th, they now hold 5 Bitcoin. So just more corporations, more companies putting Bitcoin on the balance sheet. And then Cantor Fitzgerald launches a Bitcoin-backed lending for institutions. So this is what's completely going to be changing here for Bitcoin going forward. Institutions getting involved, banks getting involved, having lending on top of Bitcoin. It's going to be really interesting to see how all this plays out. With the pro-Bitcoin presidential cabinet, we're going to see a lot of these banks start to get integrated with Bitcoin and crypto and start to do things like this. So more to come on all this, but this is a good sign to see here. And then Rumble added $17.1 million in Bitcoin. They bought 188 BTC. So Rumble buying more Bitcoin there. That's pretty good to see. And this is a chart we have been looking at. You can see this is a daily chart for MSTR versus M2 money supply with a 50-day offset, because we've seen M2 money supply has led where MSTR and Bitcoin are going in the short term. So you can see the M2 kind of brought MSTR down here, but we're expecting towards the end of March to have a blast off for MSTR and Bitcoin because of the M2 money supply. And you can see that's what's happened in the past there. So this could be another indicator that to buy the dip while we are down right now, because we could be going up higher very soon if this trend continues to play out. Obviously, this doesn't mean this is going to happen. This is just a chart, guys, but this is something we've been paying attention to very close on our channel over the past year or so. So something to think about there. But that's all I had for today's video. Hope you found some value there. Make sure to like and subscribe. We have new content coming out every single day, and I have a clip that I want to share with you guys here. So let's go ahead and check that out. I'm going to catch you guys in the next one, and have a great rest of your day.
First of all, we have $9.3 trillion of federal debt that's coming due within the next 12 months. The interest rates on that debt have dramatically increased over the last 3 years, and refinancing it at today's interest rates will create an extremely profound burden on taxpayers. Secretary Bessent has indicated his strong desire to spread future Treasury issuances across the duration curve, avoiding the risk of putting everything in the short end of the curve, as Secretary Yellen did. President Trump and Secretary Bessent have also indicated their strong interest in lowering 10-year interest rates, which have an important effect on consumer finance, mortgage finance, auto loans, as well as the federal interest expense. President Trump created the Strategic Bitcoin Reserve, and in particular directed the United States government to identify revenue-neutral ways to acquire Bitcoin. By creatively integrating Bitcoin into Treasury bonds, I would like to suggest that we can significantly reduce the borrowing costs of the federal government and defease the debt. And in particular, I would like to propose that for Americans that purchase these bonds, that they be tax-free from both interest as well as capital gains and offer a very strong way for American families to rebuild wealth. So what's the program? It's actually pretty straightforward. $2 trillion bond issuance, 10% of the bonds go for the purchase of Bitcoin, 90% go for other government purchases. Per $100, $10 buys Bitcoin. The interest rate on a current pay basis is much lower than the normal interest rate, only 1% per year. This dramatically reduces the current interest expense of the federal government. At the conclusion of the bond, in this case a 10-year bond, investors are due a compound annual growth rate of 4.5% on a senior basis. That's equivalent, roughly, to the 10-year interest rate on treasuries today. And after they receive 4.5% on a senior basis, they're entitled to 50% of the Bitcoin upside, and the United States government retains the other 50% of the Bitcoin upside.